everyone. In this video, I will explain the last week's price action, but I will explain only Thursday and Friday's potential entries. Otherwise, if I will explain the whole week, then the video will become too long. Let's make it short and sweet. So we have the bearish change of character, and once we have the bearish change of character, what we are looking for? We are looking for a QM to confirm the range, because once we got the change of character, this is no man's land. We can't do anything here until we get the QM. Once we got the QM, then we can say that we have a bearish range from A to B, and above the QM, the very first swing is called what? The decisional order block. And if the decisional order block it gets disrespected, then we are looking for long until the extreme order block, or in some cases even the external order block. So we got disrespected on the decisional order block, and the price was heading towards the extreme order block. And we will not short during any kind of, for example, if we have some swing here or three candle formation here or maybe here, we will avoid to sell in this area. Why? Because this all will become SMT once we will disrespect the DOB. And how we know that the price will exactly reach to the extreme order block or external order block, or will not just turn around like this? In this case, when the price is going up towards the extreme order block, the market will make some kind of strong lows. But this is the internal structure now, maybe something like this. And we need to identify that what is the last strong low. Once the market will take that strong low, then we will enter on this range on the sell side, and then we will target the 5 hour, between 5 hour to 7 hour. But by the way, I use a 4 hour to 7 hour. It all depends that how you do. Some people they like minimum 5 hour, but I do personally 4 to 7 hour, and I will find the entry somewhere here. In this case, we are going up and we are not short in any case, but in fact we should be long somewhere here. If we get some entry here long, entry here long, because we know the fact that it is very unlikely. In some cases it does, and in this case it did, that the market will not go just in one leg like this. The market usually goes something like this, and we will try to find the ranges here and until we reach to the extreme order block, and then we will sell. But so like I said, I will explain only 2 days entries, Thursday and Friday. Okay, let's start. So we will mark the structure here. So what we will find first, we will find the strong low, and this is the strong low. And then the market, we are looking for a weak high, and then this is all the internal, and actually then market made this one. So this one. So now we have the range from here to here. If we want to go continuously long until the extreme or external order block. But what market did? The market just disrespected the strong low. And this is where I explained before that we will turn short. And now on this candle, this candle, this candle, we are already short now. And we are not expecting any more the price will go to take the extreme or external order block. And now, once the market structure shift is done. So this is the market structure shift, and now what we are looking for, we have a bearish change of character, and we are looking for the market to take this low and make another break of structure. In this case, we are here, and we don't know that how far the price will go, and or how deep the price will go, because we have a lot of fair value gaps. We have fair value gap here, we have fair value gap here, we have fair value gap here, and a couples here. So how we know that how far the price can go up and then it goes down to the break of structure? We have no idea. If we have this much point of interest, in this case we will go one time frame higher. Let's say we go on the 30-minute time frame, and in this case what we have now, we have the fair value gap here, and if we have the fair value gap, we still don't know that the price will react from here or from here, but we will not take this one as a fair value gap. Why? Because this is in the discounted area. We want something from the premium 50% or above, because this is too low. But in any case, even if market takes this one, we can't help. But what we are looking for, we are looking for the confirmation entry. In this case, when the price will reach here or here, we will wait for the confirmation entry, and we never know that how far or how deep the price will go. In this case, the price reached to the fair value gap, and here we will go to the 1 minute time frame, and now we are looking for the confirmation entry. And for the confirmation entry, what we are looking for, we are looking for a high, and that high will confirm with the QM, and the price is still inside the fair value gap. And finally we got what, we got the QM, right? So this is our first QM, and this is a strong high. What we are looking for, we are looking for a weak low. Before we have this swing, now we have this swing to be taken out, and the price has taken this swing. So this is the liquidity grab, and this one is the break of structure. And in this case, we have the range from A to B. And now here comes the most important part, that how far the market will go to take the every liquidity, or even if it takes or doesn't take, how we will set up our trade. This is the most important part, because you don't try the market to take every liquidity. By the way, we don't have any liquidity except this one, but even if we have above, you don't wait for the price to take every single liquidity and then you will go short. In this case, you will miss a lot of trades. So this is here I will explain my thought process, that how I enter in the trades, and with my minimum 4 to 7 hours. And let's see here. Okay, we have already at the 50% of this fair value gap. Now, if we enter here, and this is our target, this is 10.37. And do you think that this 10.37 we should enter here and we should target this 10.37? If it makes sense to you, you can enter. For me, I will little bit refine here, and I will think that okay, 10.37, I know this number is so good, but let's make it a little bit refined to see that how I don't miss the entry and also I get some good number. In this case, the market is already at the 50%, so better I enter here. I never know that the market will exactly to take this swing or not. Why? Because the market actually already has taken the liquidity from the body of the candle. So now you have the risk. Risk of what? Maybe just one pip, you get it, or you lose the whole trade. So what you will go for? You want this one pip also, the price go there and then you sell, or you say, okay, I will just let it go one pip, no problem. The market has already taken the liquidity, and let's enter here and stop loss here. What makes more sense to you? To leave the opportunity, or you get it, or maybe you get even much better price, but I personally will take the entry here. And now if my stop loss is there, now I have 8.3, and still 8.3, like I said, it's a little bit above my threshold 4 to 7. Then what I will do, I want a little bit more on the safer side, and then if I go here, then it is 5.5. And now this seems much better to me. So there are, I don't say that who is right or wrong. If you want that 10R, which I showed initially, it all depends on you and how you set up your trade. I will personally set up my trade to enter here, and I will check that if my stop loss is here and this is my TP, and then what will be the RR. And if I little bit move my stop loss above the fair value gap and my target is same, then what is my RR? If that RR is anything between 4 to 7, and I saved my stop loss much better now, in this case I will go with this one. But it's only the personal preference. In this case, we will see that how it plays out. So it has almost tested that one also. And we are at the target here. So this is our 5.5 hour trade. But from here to here, we have another entry. And you know where is that entry? So what is the range now? The range is basically the high, the low, the lower high, right? And what we are looking for? If this is a strong high, we are looking for a weak low. In this case, we have a weak low here, and what we have now? We have This is a strong high and this is a weak low, right? And where is the internal range liquidity? Here is the internal range liquidity. And above the internal range liquidity, we want to enter and stop loss just at the strong high. And the target is same. In this case, you see this is still 8.14 and I will still adjust it a little bit better, maybe something like this. And I have adjusted it much better now. And now this is how it looks like. So we have two entries 5.5 and 5.5. These two entries during this whole session. After these two trades, we will go to the 15-minute time frame. And on the 15-minute time frame, we are already bearish on this market structure shift and the price. If it gives us any pullback, we will short. Until where? Until the break of structure, because we have the bearish change of character before. And now let's see if we can find any pullback. We don't have any pullback yet. And then this is the new day has started. And then what we have now? We have another break of structure. And once we got the break of structure, what we are looking for? We are looking for a QM. And the QM will be here, right? And in this case, if we get the QM, we got the QM. Now we have the range from this blue one, from A to B. And now this everything maybe will be the internal range liquidity when we will disrespect the decisional order block. So we don't have any decisional order block until maybe here. That is the major decisional order block. Or in this case, maybe I can mark this one also as a minor decisional order block. But I will not mark this one as the order block. Why? Because this order block never took any kind of liquidity. This is just one single move. If this order block takes this candle high and then the market comes down, then I will take this order block, not this fair value gap. So since this is not the order block, even it has the fair value gap, this is the up candle, it has all characteristics, but the major characteristics is missing is what? It didn't take the liquidity. So that's why we don't have any order block except here. And if we have the order block, we will not use the fair value gap. In this case, I will just mark the minor decisional order block, this fair value gap, and I'm looking for sell here, but from the confirmation entry. And then the market breaks the structure and we never reach to the decisional order block, so it's okay. So once we have the another break of structure, now what we are looking for? We have the high and now we are in no man's land, right? Since we have a break of structure and we don't know how far the market can go, we are basically the player between the ranges, something like this. So we don't have the range now. In this case, what we will do, we will wait for the QM. So after breakup structure, this is the first swing which we were looking for the market to take this swing so we can confirm our range. And rather than the market take this swing, market just continuously going down, and then we have another swing, right? And we don't know that how far it can go, but we can just mark this as a QM if we can reach there. But this is not the QM. And now this is where the anticipation trades come in. If you want to trade the anticipation trade, you can. If you don't want, we have another trade which is after confirmation, and I will explain later. In this case, if this turns into the QM, and we never know this will happen or not, maybe the price continue go down, and then we will move this line maybe before here and then maybe here, and then at some point the market will take this QM, and then we have the range from A to B. So we never know, right? In this case, we will mark every swing high, but we know the fact that it is very likely that the market will go to the QM, something like this, and maybe we can find the entries something like this. And then if this is the QM, then above the QM from the decisional order block, we are interested for the sell. So if we buy here, this is the anticipation trade towards the QM, that we are expecting that maybe the price now is in no man's land and maybe it will go to take the QM. QM means this liquidity will go to take. This is anticipation. If you want to take, you take. If you don't want to take, you don't take. But if the market really takes this one, then above this one, we are looking for the decisional order block. And then we have the entry. And this is the confirmation entry. In this case, we wait and see if we can get some kind of lower low, lower high, something like this. We are on the 15-minute time frame. Okay, so this is our first low. And if we enter here, it doesn't make sense. Let's say this one. Because if we enter here and our stop loss is something here and target is this one, this is 2.5 R, and we never want the 2.5 R, right? In this case, we go on the lower time frame to find the confirmation entry. And for the confirmation entry, we are not looking for long here, right? So let's find the confirmation entry. So we have the QM here, and then we are looking for the opposite QM. And we got another QM here. So this one will be the internal range liquidity, and this one will be the QM confirmation. In this case, we see, okay, we got the internal range liquidity already. So if we enter here, this is all our point of interest, by the way. If you see that we have the fair value gap here, and we can enter somewhere here, and now our target is 3 point at least 4 something here. This is 4R, right? Something like this. Okay, so the price didn't reach exactly to the target. It's like something 3.8R, and then it just came down. And now we go again on the 15-minute time frame to see what's going on. And here you see what we have. This low is unable to make the high. So this is the failure swing. And below the failure swing, from this rejection block, from here, if we enter, and our target is this one, if this is the 4R or 5R, we can enter. So this is the rejection block. If you go on the line chart, you can see here. So we are looking for to enter here, and stop loss is just below the swing here. But remember that this is the risky trade. Why? Because this is the anticipation trade. Why? Because we didn't get the QM yet. The price can even continuously go down, something like this, until at some point it will have a QM. And we never know when it will have a QM. We are entering just for the anticipation that the market will make a QM. So remember this thing. So if you enter here, you don't just try to go all in. You just try to manage your risk like one. If usually you risk 1%, maybe you can risk 0.5%, something like this, something like this, because this is the anticipatory trade. And if you get here on the failure swing, and now you have the fiber, and now if you enter here and you get your 5R, and once you got your 5R, now we have the range from A to B, this one. And above our QM, what we have? We have the decisional order block. So once the price reach to the decisional order block, what we are looking for? We will go to the 1 minute time frame for the confirmation entry. Now we are looking for high. So we have the QM here, and now we are looking for the opposite QM. So we got the opposite QM. So if you see that this was the high which was never taken out, then this was the high which was never taken out, and this is the internal bars we don't take. So that's why we don't have any kind of QM until we reached here and here. So once our QM is confirmed from A to B, now we are looking for to enter here, and our stop loss is, we check our stop loss how it looks like, maybe 4 5, we don't know 4 or 5. We check here our target. If it reach to our target, maybe the first target is here, if it can offer us a 4 to 5. So it is offering 3.38 if we cover up the whole DOB, decisional order block. So what if we a little bit adjust here, and now it makes more sense, right? Now it is, if we reach here, this is the 4-hour trade. If you want to take this one also you can take, but I personally want to take a little bit bigger because my all entries have the bigger stops, because I know the fact that the market can take the high and then it can go down. Because when it if takes the high, maybe because we are still inside the decisional order block, even the market it takes the high, this one, and even if goes higher and then goes down, still this is all the POI. So maybe you will be stopped out, but still the trade worked out. So that's why maybe I will just compromise on the 1 hour rather than to 5 hour here. Maybe I will get a 4 hour, but I will compromise this 1 hour extra. So it all depends on your personal preference. Why? Because I know the fact that we are still inside the decisional order block POI. And then, and here we go. So we have the 4 hour trade, another one. So on Friday we have the three trades, and on Thursday we have these two trades.